Good morning, good afternoon, good evening, depending on where you are joining us today from. Welcome to Profinch podcast, where we dive into the trends, ideas, and innovations shaping the future of finance. From banking to insurance, blockchain to payments and policy, if it's transforming the way money moves, we're talking about it. So let's get started.
Hi everyone, welcome to Profinch Talks, the podcast where we speak to SMEs and leaders from Profinch and the industry to understand some of the latest trends and industry perspectives. Today's episode is a special year-end roundup where we look at 2025 through the lens of financial crime and compliance management. Truly a year that's changed the tempo for financial institutions and regulators alike. To help us unpack these developments and what they mean going forward, I'm joined today by Ram, our subject matter expert for Oracle OFSA's Financial Crime and Compliance Management at Profinch. Ram works closely with financial institutions across regions, helping them navigate regulatory expectations, modernize FCCM platforms, and prepare for what's next. So Ram, welcome to Profinch Talks. Ram, if we were to step back and look at 2025 as a whole, it feels like a turning point here for financial crime and compliance globally. Regulators didn't just issue guidelines, they actively tested whether controls actually worked in practice, right? So in 2025, what were the most impactful regulatory and supervisory developments globally in the FCCM space, Ram? And how did they influence financial crime prevention becoming a number one priority for financial institutions? Yeah.
Thanks, Niranjan. So I was pretty much delighted to talk about the 2025 because all that I've seen through all these years, the 2025 was the busiest year I've ever seen in the financial crime space. Because something or the other in the geopolitics or from this regulations are coming up every day. So 365 days we have something to talk about. So that is what we had in 2025. Okay. So, 2025, the financial crime has hit historic levels, both in the volume as well as in the complexity. So, number of channels has increased, number of crimes has increased. That's what happened in 2025. But at the same time, while the volume of financial crime and complexity increased, at the same time, 2025 had many fines, the regulator fines. So, as far as we see the financial crime is evolving, so is the compliance is also evolving here, so to combat with it. So that's how I see this change. When we speak about this changes, I would say this FATF has made up a clear instruction that countries should not take this financial crime as a checklist or just a paper work or something like that. So they should build a clear-cut policy. So the bank should show their AML controls actually stops the financial crimes. It's not in the way that, hey, I have this, I have that. No. How are you stopping it? Quick roundup on that. So what happened on where all we have seen the changes is so a risk-based approach was reinforced. Then the FATF even wants more transparency in when it comes to the beneficial ownership. So they want to know the regular updates are happening on the beneficial ownership or how genuine it is. How are we authenticating that particular beneficial owners and how is the data accessible for the other bank as well as the central bodies. This is on the beneficial ownership. Okay, and then still we see the shell companies and this complex ownership as a primary risk for the financial crimes to happen. So when it comes to the grey listing, so that is what we need to talk about because the grey listing, we saw 5 countries removed from the grey list and 2 countries added to the grey list. So they had last year they had published it twice, and in that, surprisingly, the entrants were the Laos and Nepal, the new entrants of 2025. So both are from the Asian region. But the removal or from the FATF was one is the Philippines. Philippines got removed in 2025 February. Okay. So that was a great relief for Philippines because Philippines is a blooming economy. Good that they got out of it. And the other 4 were from the African region. So African region is working hard towards making them out of the grey list. So that is in their plate for such a long time, and they started working it, and then they're prioritizing it, and they are succeeding it. That's what we find in the FATF removal. So this gives a clear indication that the countries around the globe are gearing up themselves to remove from the grey list and show them they have the robust controls when it comes to the financial crime and combat is there.
Sure.
Okay, so this is the quick roundup of the FATF updates as well as the general updates. But as we see, there were plenty of penalties happened in the last year. So that usually you might hear when it comes to the regulatory penalties, you'll hear only the banks. But this year, so we got banks, we got fintechs, we got crypto exchanges, we got money transmitters and the payment processors. All of them were fined equally.
Okay.
So you see, this particular regulatory compliance is becoming a mandatory for not just for the banks, but for everybody who deal with the money. So that's how the message is. And then 2026 also will be like this only.
All right, that was interesting, Ram. In fact, I mean, what I understand is what clearly came out was that regulators weren't just satisfied with the intent or documentation, but they actually wanted proof of effectiveness also. I think from what you spoke, that stood out for me. Effectiveness in terms of speed, governance, and quality and monitoring is something that is interesting. And this naturally leads me to my next area where financial institutions felt growing pressure in 2025. We saw increasing regulatory scrutiny, especially around the areas of transaction monitoring effectiveness, model risk, and explainability, so to say. How did this shift change the way institutions approached FCCM design and governance in 2025, Ram? Yeah.
So as far as this transaction monitoring, you were talking about transaction monitoring. So now it's not just showing that you are monitoring what you are monitoring, but how it is working, as I said. So how your scenario works. Okay, how your scenario is getting calibrated when it comes to the time and the frequency of the data what you have. That's one thing. And another thing is, see, there was a concept of AML fraud separately. There's one concept coming as FRAML. Okay, FRAML is the converging of fraud and AML into one operational problem. We already have the transaction monitoring related scenarios already configured within the FCCM. Understood. So now they need to add the fraud related rules also into that. And another thing is the banks need to add the scenario calibration into that, just to make sure that they don't want a separate silos, one for fraud, one for analytics, one for like transaction monitoring. Bring everything together, and in this all should be possible. Okay, so the banks needs to implement tools like FCCM Compliance Studio, which will help them to do the automatic scenario calibration and then work around with the behavioral models and find out the behavioral anomalies. Then that is what it will be now looking out for. Okay, so this Compliance Studio has a different behavioral models which allows to develop and deploy machine learning models to monitor transactions and the suspicious activity. See, what we had previously was straight cut coming out from the rules. These are the rules. Okay, if the transaction is, if somebody is doing structuring, identify it and report. So if somebody is depositing some cash exceeding the threshold, you report it. But now it's not like that. So along with the normal rules, you have to induce certain behavioral rules as well, and then to find the exact patterns. One more last thing on this is so we are working on to near real-time related transactions.
Okay.
So which is, I was telling you, so previously last year again there was a major shift was from the MXMT messages to ISO messages. So this transaction filtering tool will be able to do the messaging and the payments related transactions, do it on the near real time. Okay, and as I said, so the enterprise fraud platform of the FCCM is designed to do and catch the frauds on the near real time as well as the real time.
Sure.
That's on the transaction monitoring side.
All right. So basically, I mean, what I understand is, and as I see it, so on one hand, financial institutions were pushed to, somewhere strengthen models, outcomes, and govern them better. And on the other hand, the actual nature of financial crime itself was evolving at a pace, becoming faster, more digital, more connected, right, through the examples that you were giving. Now, financial crime typologies, Ram, continued to evolve in 2025, from obviously mule networks and authorized push payments to digital and cross-border frauds, right? How well were existing FCCM frameworks able to keep up, and were financial institutions more in pressure?
So as you see, this our top two methods used in last year was one is a money mule network and another one is the cross-border scams. Okay, so this is kind of sometimes it the mules know that they are doing something wrong, and sometimes they don't know. So usually these legacy systems, okay, were built with a slow and higher value payment. Okay, it was like based on the alerts, the quantitative or the number of alerts or number of money involved in it, something like that. Okay, but when you have a hybrid systems, so which will not work just only on rules, but which has certain other algorithms as well. In our case, the FCCM has the capability to find out the rapid movement of the funds or change in behavior. So though we don't have a specifically designed rules for the money mule, we have the patterns which will identify the money mule related scams as well as the cross-border scam.
Okay.
So cross-border scams is like nothing but pushing the victims in one country to send money through another country, or the wire transfer to any other region or something like that. You might have seen it in many instances.
Yeah.
Okay, so some sort of extortions, okay, cyber extortions, not the actual extortions, cyber extortions, they use the cross-border scam tools. Okay, so in these cases, be it whether the sender or the recipient's bank account, this transfer can be easily made to trigger a red flag. Okay, so here, though these are evolving crimes, but we can use the existing rules and existing framework to catch these crimes. Again, for next year, I believe it will be more on the stable coins, cryptocurrency. Those will be the key part here, and they will have more, because see, as of now, we were till last 4 or 5 years we were having less than 1% in the cyber or cryptocurrency related scams involved, but now it has rose up to 5% of the total financial crime is happening through the cryptocurrencies. So it will be more.
Got it. Sure. Right. I think in our previous podcast, you also touched upon a very interesting point about as to how in the future what we're going to see is that it's best if financial institutions stop treating fraud, AML, and sanctions as separate problems, right? And instead look at them as one connected financial crime ecosystem.
Yes.
I think that's something which I still remember from our previous podcast. Now with that context, let's move ahead. Based on the regulatory signals and enforcement trends we saw in 2025, Ram, what should financial institutions expect next, and what early steps should they start taking now to stay ahead in 2026?
So 2025, we got a clear message from the regulators that what they are looking for. And now they are ready, and they are ready for the game. Now it's the banks to stand up to the expectations of the regulators, because if in 2025, if they had rose their expectations, in 2026 they are not going to touchdown. So it is going to be more. So the banks financial institutions has to know that what rather they can say what is they should say what is coming and what to do now. They should have in that particular answer for this.
Okay.
So what can be expected is it will be more effective supervision, not just the supervision.
Okay.
All right. So they'll have a more risk-based program where they will have more questions, and then they'll be asking the more questions on how you are doing it. If something is not right, so we should be able to raise the standards and do it.
Okay.
All right. So effectiveness means of how, for example, I'll tell you, see this SAR STRs. So how effective is it? How many percent of it you are sending the false positives? That will be the question from the regulator. So if you don't know where you are getting more false positives, because the regulator will have the data. Even before you answer, regulator will say that, hey, you are giving me 76% of the false positives, out of which this particular scenario is causing more false positives. So the bank should have the answer ready. Banks should have how they're going to handle this particular scenario on going forward. How are you going to tune it and calibrate their scenario? That answer the bank should have.
Sure.
Okay. And next is the beneficial data ownership is the core theme. So be it in the Europe, be it in the Asia, they should have, the FATF is pushing us to have the transparency on the beneficial ownership data. So ideally, as I previously given you the hint, now we need to have the beneficial ownership data which is validated, number one. Number two is that data should have some sort of easily understandable representation. See, beneficial data means not in some cases the beneficial ownership will be plain vanilla. So one beneficial owner will be there. So some cases, to hide the beneficial ownership, what will happen is Mr. A will be the beneficial owner of say one particular company. If you go and check in Mr. A's profile, or sometimes what happens is there will be one company whose beneficial owner will be another company, and that beneficial ownership will again cascade down to some other owners. So there will be nested ownership here. So here what we need is there should be some graphical method or easily understandable method through which a person can go and read this within 60 seconds. If I type on this particular database to understand who is the beneficial owner, I should be able to see the entire list and with a graphical representation or something like that. So that the bank should develop, and this is what I was mentioning about accessibility. So already we are having the registry for the beneficial owners, which is maintained in the European region. So similarly, that will be rolling out to the other regions as well.
Sure.
Okay. Now again, there will be some typologies or some methods which is common for the fraud and the AML. So by doing a single integration or integrated system for the FinCrime rather than siloed ones, so what will happen is you need to store one particular scenario in one particular place. That's it. So if some transactions come in this particular scenario, be it as a fraudulent or be it is related to financial crime or be it related to terrorist financing and anything, this particular scenario will bring out and give us the results. Okay, so this is also one more reason why we need a hybrid and integrated fraud and AML model.
Sure.
Okay, one more thing is the cryptocurrencies and the stable coins related risks that has to be addressed. So already we have seen countries has started accepting the stable coins into their systems. So we spoke about Japan, we spoke about Singapore. So if two economies can accept stable coins, and the question will come that why the other countries can't. So if yes, then this has to be the stable for the stable coin. How are we going to handle it? How are we going to handle the risk associated with it? Because with having a limited scope of understanding of how it works, because only the developed economies will have all banks understanding about the cryptocurrency. So if you take a local bank which is in a developing economy, they might not understand. But still, if the country is bringing the stable coins into their economy, obviously they need to understand, and then they have to also accommodate the risks accordingly.
Sure.
So to facilitate this FATF has changed their rules that even if it is a cryptocurrency, the beneficiary as well as the originator, which is the sender and the receiver, the details should be available in all transactions that is associated with the cryptocurrencies.
Interesting.
Right.
Okay.
Right. So this is a change. So this is the rule which just came in 2025. So mandating everything. And one more thing is like previously for this, when we were doing the wire transfers, there were a lot of things that were mandatory, like address and everything. So as these are PIA information, the FATF said, okay, fine, we need the sender information, receiver information, but we don't need the addresses. Okay, so that was a little bit relaxation, but still.
Sure. I think a lot of points, and thanks a lot for the insights, Ram. I mean, that was really helpful. If there's one message for financial institutions coming out of 2025, I think it's that financial crime and compliance is no longer just meeting regulatory checklists, but it's about building, I think, resilient, data-driven and integrated systems that work in real time, right? Thanks for the wonderful podcast, Ram, and thanks to everyone for joining. Yeah, please.
Quickly, one thing. So as a takeaway, okay. So as a takeaway from this, so what the banks can do is like they need to do a self-assessment of their financial crime ecosystems. So that is like, so how are they aligned? How the institution is aligned with the entire fraud and AML together? Is there any gaps? Do they have the capability to do the real-time transaction screening? Okay. Next is, do they have the capability to do the scenario calibration? Okay. And how far they are maintaining the data on the sanctions, and then what are their cryptocurrencies? So they basically, this New Year resolution for the banks on the financial crime should be doing their self-assessment as the exercise.
Right. Great. Thanks for bringing in that last aspect. And I think thanks for being on the call and speaking to us, Ram. And to our listeners, stay tuned for more conversations, coming your way in 2026. Thanks a lot for listening in, and take care and have an excellent 2026. Thank you. Bye.
Thank you.